Hi there, welcome to Kneppy Invest. In today's video, I'm going to talk about something that I learned fairly early on in my investing life, and that is not to just look at the reported profit and then judge a company's performance based off that. And a lot of times you will see this in the news, particularly if a major company has had a significant loss. So maybe 10 years ago, when Qantas was going through all their problems, the headline news back in those days would have been Qantas loses $1 billion. Now, that's not the whole truth. That's only an accounting loss. It doesn't mean they lost $1 billion in their operations. And I prefer to have a look at how the company is performing in their operations and then go to any accounting losses or accounting profits. And the reported profit is typically an accounting profit. It's not the profit the company has made in the operations. So reported profit can be deceiving. And I'm going to show you a perfect example in today's video, a company that I actually do own in my portfolio, a trading stock, because this company is experiencing some good times, some really good tailwinds behind it. And that company is MMA Offshore, ticker code MRM. The current market cap of MMA Offshore is around about $390 million. Thereabouts, slightly higher on some days because the stock market is quite volatile now with all the shenanigans happening in the American banking system. And they reported first half of financial year 23 profit of 81.7 million. So you can just see it straight away by comparing the market cap to the profit that there is something going on here, because if you take the last half of financial year 22 profit and the first half of this year's profit, you get a number about 120 million, which means the P ratio of the trailing 12 months is 3.3. And if you saw a P ratio of 3.3, you either think this company is extremely cheap or it's a value trap. And more than likely, the answer to that question is it's a value trap. Now, I'm not saying MA Offshore is a value trap, but based off its first half of financial year 23 profit, it would be a value trap, because anyone rushing in and buying MA Offshore or this company because they think it's cheap with a P ratio of 3.3 are in a trap-like scenario, because the true P ratio of MA Offshore is a lot higher than that. Maybe not a lot higher, but it is definitely higher than 3.3. Now, I'm assuming that there are a lot of investors out there who, instead of looking at the financial statements when a company releases their half-year or full-year results, will just go to a financial website or something like Ticker, Wall Street Journal, Yahoo Finance, Google Finance. And I've mentioned those four websites because I've just taken a few screen grabs of the reported numbers that they have on the website in regards to MA Offshore. And what these websites do is just get the numbers from the financial statements of the company. For instance, on the top left, we have Ticker, and their reported, or the company's reported, a profit is 81.7 million, because that's what they are reporting. On the top right, we have Wall Street Journal, net income of MMA Offshore in the last half year, 81.7 million. On the bottom left, we have Google Finance. So instead of looking at the reported profit, I've just gone straight down to the P ratio, and the reported P ratio on Google Finance for MA Offshore is 3.4 because of that elevated profit. Again, earnings has been elevated because of a few one-offs in MA Offshore's profit. And in the middle here, we have Yahoo Finance, which is the trailing 12 months financial performance of the company. And right at the bottom there, net income of $120 million. So you compare the net income of $120 million in the trailing 12 months to the market cap of the company, gives you a P ratio roughly between 3.3 and 3.4. So the main moral of this story is, when you are doing research on a company, don't just go to a financial website and start and end your research on a company at these websites. You do have to dig a little bit deeper. Typically, when a company releases the half-year or full-year results, particularly if they're a bigger company, is they will release 3 announcements back to back to back within like 1 minute. The first announcement should be the financial report. This is the most important announcement the company will release, or the most important document. Another announcement they will release is probably a media release. Not all companies will do that, particularly smaller companies, and most companies will also release a presentation. Now, when I do see a company releasing these three announcements, when they are releasing the half year or full year results, I go straight, always go straight to the financial statements. I'll look at the cash flow statement, have a look at the balance sheet, also have a look at the profit and loss statement, and then draw my own opinion about how the company is performing. And I'll always do that before I go to the media release or the presentation, because typically, not always, but typically, the management will want to spin some positives within the announcement and also the presentation. And I want to draw my own opinion on how the company is performing before I get to those rosy opinions from the management. Now, I would assume that the media release is probably the go-to for a lot of investors, a lot of journalists. They will see the media release and think, typically the media release is going to be short. It's going to be nicely put out from the media team of the company, and also going to have some headline numbers. And because a lot of results are released simultaneously on the same day, sometimes it's good just to have a look at the headline numbers. And the headline numbers for MMA Offshore were quite impressive. So even though I'm using MMA Offshore as an example in this video, the results were really good, but you still have to understand how they got to the results. So let's have a look at the reported results from MMA Offshore that they actually did use in their media release. Revenue up 16.6% from 137 million to 160 million. EBITDA up 124.5% from 14.3 to 32.1 million. And profit up more than 100% from negative 5.2 to 81.7 million. Now, if I went straight to the media release, the first question I would have is, how did this company increase their profit from negative to positive 81.7 million, yet the revenue only increased by 16.6%, and the EBITDA is significantly lower than their profit? There must be some reason behind that. And fortunately, MMA Offshore, in their commentary, even within the media release, did give us some insight to why the profit was so large in this half year. Fortunately, we do get some insight to how this company achieved a profit number of 81.7 million, because in their commentary, they explained that the company generated profit of 81.7 million because that included an impairment reversal of 47.6 million and profit from the sale of assets shipyard of 25.1 million. So if you add those together, you get 72.7 million. So you track that from 81.7 and you come up with a real profit of around $9 million. And it's really interesting to know that there was an impairment reversal. So in previous years, they would have had an impairment, and that would have actually had a negative effect on profit. More than likely, they would have had a massive loss in that year. And also, a lot of times you will see companies sell assets, and they could sell those assets at a profit or a loss. And these are one-offs, and they also will have a positive or negative effect on the reported profit from the company. So you always have to be aware of how a company achieved their profit results for any particular period. And for MMA Offshore, that was two one-offs, an impairment reversal and a sale of assets. And maybe not a reader, maybe just like tables. And if you do have a look at one of the tables they did report in or show us or give us in their presentation, it's all explained pretty clearly in the numbers. So go down here in the numbers, revenue up, again, 16.6%. And down in the middle here, we have asset impairment reversal of 47.6 million. There was no asset impairment reversal in 2021. So that was up 47.6 million or 100%. And then in just below that, we have profit on sale of assets, 25.1 million. So again, just by looking at numbers, without even looking at the commentary, you can see why the profit for this company was elevated by about $72.7 million. But maybe you are like me. Maybe you go straight to the financial statements, look at the statement of cash flows, balance sheet, and then the profit and loss. And if you go to the profit and loss statement, It's all in the numbers again, just like that previous table I showed you in their presentation. So you start off with revenue of about 160 million, and then down the bottom here we have impairment reversal at 47.6 million. Also a gain on disposal of shipyard, 22.9 million. So it all adds together, and that's why this company had a profit of 81.7 million. So this was no surprise to me. I knew exactly how they got to this profit number, even though it does seem exaggerated, because I went straight to the financial statements and I saw this gain on sale of assets, and I saw this, impairment reversal, and I knew straight away that that profit number was way higher than it would be if they didn't have these two one-offs. And in my opinion, it is important to have a look at the three financial statements, or the three main financial statements. Also have a look at the notes as well. That's something I like to do. But when you do have a look at the statement of cash flows, you can instantly see how this company did perform in the operating activities. So MMA Offshore was operating cash flow positive by 22.6 million. In investing activities, they received 20.3 million from the proceeds from the disposal of shipyards. So net cash provided investing activities up to 32.5 million. Repayment of borrowings, 35.6 million. So they repaid a lot of their debt in this particular half year, mainly because of that disposal of that shipyard. So it's very important, in my opinion, to have a look at the three financial statements. Just don't go to any media release. Have a look at the headline numbers, because it can be deceiving if you don't understand how a company can get to the reported profit or any of the reported numbers they do provide within the media release, particularly in those headline numbers. Now, I am not having a go at MMA Offshore in this video. I'm just using them as an example, because what they've done is legal. An accounting profit is a real thing. They made a profit on the sale of that shipyard. That impairment reversal is because a few years ago, when they did an impairment, they went a little bit too hard on that impairment, and they realized, well, they went too hard and they've had to reverse that impairment. And a lot of times you will see splashed across the headlines that a company, particularly if it's an iconic company, that company lost $1 billion in the past year. The amount of times I've seen that sort of headline in the past 10 years, 10, 15 years, has been staggeringly higher. Because just remember, about 10 years ago, when Qantas was going through all those problems, I'm pretty sure they had an accounting loss of about $1 billion. And it was the front page of the newspapers, the top story on the Channel 9, Channel 7 news at 6 p.m. Qantas loses $1 billion. May not have been $1 billion, but I do remember thinking, well, it's not a real profit. It's an accounting profit. So you do have to be aware when you see really big losses or really big profits, particularly if you do know the company a little bit more deeply than most investors out there. How did the company get to that profit number, either on the high side or the low side? And then if you do try to understand it and you come away appreciating how they got to that number, I think you will appreciate that company even more, probably or possibly. Anyway, on to MMA Offshore. So even though it might seem like I'm having a go at the company, they're doing wonderful business right now. This is a brilliant looking chart, share price in a well-defined uptrend. The market reacted really well to the financial report from the company. Share price reached a high of about $1.27.5, but has pulled back into a buying zone. That buying zone is into the moving averages area, that sort of green shaded area. I call that the buying zone when you do see a pullback for a company that is in an uptrend. So the share price has pulled back a nice little distance, not high volume. That's very important. We did see high volume when the company did release the half year results. In fact, really good volume coming through, which is a sign that there is fund managers out there getting interested in this company. And as the share price has pulled back, that volume has been considerably lower. So share price of MMA Offshore, even with this pullback, is still in a really nice uptrend. But be aware that MMA Offshore is a cyclical company. Now, they are trying to diversify their revenue streams, and that is a good thing, because if we go back to the start of the 2010s, this company's share price got as high as about $24. May not have been as high as $24 because there might have been a capitalization in there. But then this company experienced a lot of problems around about 2014 into 2015. Share price dropped from $24 all the way down to less than $1. And the reason behind that was because of the mining down cycle. This company was going to be affected by less mining companies exploring and drilling, that sort of thing. So if you look at the longer term chart, definitely not the sort of company you want to be in for the long term. But if you do have a read of what the company is doing to diversify their revenue streams, I think they're on the way to overcoming some of the cyclicality, if that is a cyclicality, that they have seen in the past, particularly in that period between 2013 and 2016. That's all I have for this video. If you have any questions, any thoughts, any comments, if you have had an example in your investing life when you reacted on the reported profit, but it was deceiving. It's happened to me once before, about 10 or 12 years ago, when I saw a reported profit of a company and I reacted way too quickly. I bought some shares, and then as I delved a little bit deeper into the financial statements, I went, oh, wait, they had a profit from the sale of some assets, and their reported profit was probably higher than it should have been. And as soon as I realized I made no mistake, I had to sell my shares pretty quickly. So if you do have an example like that, I'd love to hear from it. So just leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.